Hold on. Are we live, Akash?
Yes, yeah, no.
Great.
Okay.
Okay, great. I'd like to call this Finance Committee meeting to order. And I guess I'm hoping that Kathy will take roll call.
Absolutely. Okay. Bella,
Yes.
Nancy,
Yes.
Dimitri.
Yes.
Thank you.
Okay, that's all of us. So I think the first item on our agenda is to approve the minutes from our last meeting, which was January 27th. So I guess I'll entertain a motion to approve the minutes.
So moved.
Yep. Second.
Great. So Kathy, I guess you'll take a vote?
I will. Okay. Dimitri,
Yes.
Nancy,
Yes.
Bella.
Yes.
Thank you.
And that motion passes. So the next item on our agenda is to have a financial update for 2024 and 2025. And I believe there's a presentation that will be presented by Connector staff, Carrie Miller, Edith Boucher-Calveo, Rakita Lakdawala, and Josh Weinberg. So Carrie, I'm going to pass it off to you.
Thank you, Bella. Good afternoon, everyone, members of the A&F subcommittee. Today, I'd like to welcome Bella into her new role as the chair. So congratulations, we're very happy to have you. The purpose of today's meeting is to review our updated financial projections for fiscal years 2025 and 2026. The FY26 recommendation for the administrative budget, if approved by members of the subcommittee, will be presented to the full board in June for a vote. Between now and then, if there are any updates, they will, of course, be shared with this subcommittee prior to that meeting. Today, we meet during a time of uncertainty and volatility with respect to both federal and state policy and fiscal challenges. Our assumptions reflected in the projections that we will review today reflect current law. So specifically, we are assuming that both the enhanced federal subsidies as well as the Connector Care pilot program will expire in December 2025. We are aware that both the governor and the House have proposed an extension of the pilot in their budgets. The Senate did not, but that will be worked out presumably during conference committee, which typically takes place in June. With that said, given all of the uncertainties, we are working to collectively ensure that we prepare for any changes to come. And we have included in the appendix a couple of different scenarios reflecting what the total liability to the CCTF would be under varying scenarios. And we can discuss those later if you would wish in the meeting. With respect to fiscal year 25, the total liability to the Commonwealth Care Trust Fund, or the CCTF, is $355 million, which is in line with the projections that were shared at the last subcommittee meeting in January. This $355 million supports 100% of the Connector Care costs, as well as a portion of our administrative costs. When you account for federal financial participation, or FFP, which is credited to the general fund, the net cost to the Commonwealth for the Health Connector is about $217 million. Fiscal year 26 projections are estimated at $433 million, which is about $31 million lower than the prior estimates that we shared with you in January. Net of FFP, this equates to $264 million. The primary driver here is a reduction of $20 million from the CCTF to support our operating costs. Since we last met in January, we now have more information on the outcome of the enrollment and premium billing vendor procurement. We have an apparent successful bidder, and we have updated our projections to reflect their cost proposal.
Carrie, I'm so sorry to interrupt. I'm still on the title slide. I don't know if
I am so sorry.
No, not at all.
I'm so sorry. Okay. Apologies.
No.
Thank you, Audrey, for letting me know that. Sorry. So as I was saying, for the enrollment and premium billing procurement, we do have an apparent successful bidder. We've updated our projections to be in line with their cost proposal, and we will be discussing this in more detail in subsequent slides. So I will pause for folks to have a look at the slide since I didn't share it for very long. Apologies. But if there are no questions at this time, I can turn it over to Edith to begin discussion on fiscal year 25. And hearing none, I will pass it to Edith.
So good afternoon, everyone. As Carrie mentioned, the actual costs for FY25s are in line with the one presented to this committee last January. The gross cost, as you can see on the slide for the program, is expected to be $355 million, which is $435,000 more than projected, and that's as a result of higher membership than expected. After we can go to the next slide to see the net costs. So after accounting for federal financial participation, the net cost of the program is projected to be $217 million, which is $167,000 more than projected in January.
Can I ask a question here, Edith?
Yes, sure.
So the 305,000 year-end members as of January, and then now we think it's 317,000. Yet total program cost, it hasn't changed too much.
Right.
Can you just elaborate as to like why that would be?
The cost on a per member basis is actually kind of offsetting this variance. So it's a little bit lower than expected.
Okay. Is there what particular category of expense that was lower than expected?
Like for example, the state CSR wrap, often when people are joining, they tend to pick the lower cost carrier, which tend to decrease the PMPM over time. And this is what happened, this year.
Okay.
Any other questions? So the number of member months for FY25 is 0.8% higher than what was presented at the last ANF subcommittee meeting in January. 80% of the variance in membership comes from the core Connector Care program. And this program is projected to have a net membership growth of almost 45,000 members, or a 21% increase from June 2024 to June 2025. So that's a significant increase. Any question?
Edith, going back a bit, the calculus I was always looking at was that as we introduce more efficiency, a growth in a number of enrollee meant that our actual costs associated with providing services to those folks were going to decrease a bit. But that's not seems to be the case. Am I missing something?
Are you talking about the administrative or the operating cost, or the cost of the program?
I'm looking at all three level, but mainly the administrative costs and for the program.
So I'll let Carrie answer this one.
Yes, generally speaking, Dimitri, as we gain more members, it's been a long time. I don't know if you recall, we used to have a slide that kind of showed our administrative costs per member per month. And as we do gain more members, we do see efficiencies in our expenses. So it is a lower cost per member per month. If it would be helpful, I'm more than happy to resurrect that slide for you, and we can share some updated information.
That would be very helpful. Thank you.
Thank you. We'll make sure to do that.
So if there are no other questions, then we can turn it over to Josh to go over the admin budget for fiscal year 2025.
Thanks, Edith. Good afternoon, everyone. So here we have an overview of our net position. And then the next slide is going to be a breakdown on our expenses. And this is just comparing the numbers that we gave you guys in January to what we have right now. So with gap adjustments, the net position for fiscal year 25 has a favorable variance of $8 million compared to the January numbers. This results in projected reserve levels of just under 70 million. The favorable reduction of the expenditures by more than 8 million is mostly due to lower than expected costs for the contact center, enrollment, and premium processing. If there's no questions on this, I can get into the expenses.
I have one question, I guess. It kind of goes along the same lines as a question I had for Edith. So we have an increase in member months, so I would expect to see an increase in expenditures, but I guess that's being offset by the premium billing and enrollment on lower than expected costs. Like, do we see an increase in expenditures because we have an increase in membership?
I think that just ties to what Edith said, just since it's lower than expected per member per month costs, then the expenses are sort of offset.
I would also add, Bella, that a lot of which Josh will talk about on the next slide, but back in January, we did not know very much about where the contact center arrangement was going to go. So we had budgeted a pretty healthy amount for Accenture. Because we knew that their contract was going to be extended, but we weren't really sure at the time for how long or how much. So the final amendment that I believe is almost final, that reflects a pretty significant reduction in the assumptions that we had back then. So but if you would like, I can switch to the next slide and Josh can go over the expenses. Unless, I'm sorry, Nancy.
Oh yeah, Nancy, you're on mute.
Sorry, I think after 6 years, I would know how to do this. Why are all those expenses non-GAAP expenses? Could you remind me? I always get confused at the GAAP versus non-GAAP.
Yeah, that's just the way we're
Distinction.
recording them. Just general accounting principles.
Yeah, I know what it stands for, but why is it non-GAAP?
The reason that we show it this way, Nancy, and we are more than happy to consider other views, of course, as well, is we kind of like to show a cash view, if you will, that helps justify how much money that we would need out of the Commonwealth Care Trust Fund. So over the last few years, as you know, we've had a number of various implementations with new vendors. So that money, that we get from the CCTF, whatever the implementation cost is, that money is going to go out the door this year. And then of course, but then we need to capitalize these assets, right, over the course of the contract term. So the non-GAAP is kind of like a cash view, if you will, and then the GAAP we convert it back to GAAP in order to reconcile to the financial statements. Does that help?
Yeah, so the non-GAAP is cash. And then when you convert it to the GAAP, then that's more what I would be accustomed to seeing in sort of a rural basis. Yeah. Okay.
That's absolutely right. Yes.
Okay, great. Thank you.
Thank you. And I'm sorry, Bella, did you have another question? Did I interrupt you earlier?
No, I guess my question is, and maybe it also goes along the lines of what Dimitri was asking earlier, is as we see increase in membership, or we assume, or we have more members than what we had assumed, do we see higher administrative costs, for every new member that comes in? And do we see higher program costs for every new member that comes in? And then are these all offset by other things? And that's why we're not seeing these higher costs?
So that is a great question. And I think right now, so we have a number of different contracts with different vendors. Some of them are per member per month, right? So we pay a little bit more as we get more people. but we have been converting some of the newer contracts to fixed price. So I think it will be really telling over the next couple of years as we get some history behind us, to see what happens. But presumably, the revenue that comes in, not presumably it is on a per member per month basis, for a lot of these vendors that have or that are we pay on a PM basis. The revenue is higher than what we would pay them.
Yeah.
So we do see efficiencies. And these are great questions. And like I said, we did have a previous slide where we show kind of our administrative costs on a per member per month basis, and I'm more than happy to resurrect that.
Yeah, I think that would be, because that was, I guess, one of my questions when we go over fiscal year 26 is to look at PMPM. How does the PMPM for fiscal year 26 compare to the PMPM for fiscal year 25? Especially in fiscal year 26, the member months is actually higher.
Absolutely. And we are happy to put that together for you. Should we continue to the next slide?
Yeah.
Okay. Oh, Josh, I'll pass it back to you.
Thanks, Carrie. Okay, yeah, so here's the breakdown for all our expenditures. Like I said, we're projecting a favorable variance of over 8 million for this year. The big driver being the contact center and enrollment and premium processing costs, and then personnel costs also factored in there. So for the contact center, the costs were a lot lower than expected by about 4.4 million just for ongoing operations. And then for both technology and work order costs, there was a reduction of nearly 800,000 for each of those. And then also we had removed 1.6 million for activities that a vendor would be doing to help support us with the EPB implementation. But these are going to be supported by contractors, which we have reflected in the consulting line item. And then personnel is down almost 700,000 just because of a number of departures and then delays in backfilling positions that we had opened up to to fill those empty positions. Does anyone have any questions?
Yeah, are those positions just remaining open on the book, or is the connector actively recruiting to fill those positions
Yeah, they're
as
open.
it relates to the budget?
Yeah, we have them open. Some of them are on hold right now, but we update that on a monthly basis.
Okay.
Are there any additional questions for fiscal year 25? And if not, I'm happy to turn it over to Edith, but I'll pause to see if there's anything else. Okay. So I will pass it back to Edith. Thank you.
Thank you. So as Gary mentioned in our introduction, there continues to be a lot of uncertainty for FY26. So among other things, like there are 3 major dynamics that can have a significant impact on membership and cost for the program. The more generous CPTC subsidies of the Inflation Reduction Act are set to expire at the end of 2025. And the expiration of those subsidies would have a significant impact on state premium RAP costs. The connector care expansion pilot is also currently scheduled to expire, as Carrie mentioned. And we also have the Marketplace Integrity and Affordability Proposed Rule issued by CMS. So if adopted, these rules would have impact on both cost and membership of the program. So the numbers that are presented in the next slides reflect the expiration of both the more generous FDC subsidies and the connector care expansion pilot at the end of 2025. But they do not include assumption relating to the marketplace integrity and affordability proposed rules. Also, as Carrie mentioned, we have included some projections in the appendix for different scenarios of what could happen with these three dynamics. As a reminder, for calendar year 2026, we're assuming that the parameters of the premium smoothing program for the core connector care population will remain the same as calendar year 2025. There is no premium smoothing for the connector care pilot. Enrolling contribution for the lowest cost civil plans are projected to increase by 3.9%, which is the FPL increase. CSR loaded rates are also assumed to continue for plan year 2026. And the 2026 rate increases were projected to be relatively high compared to prior years based on feedback received from carriers and the DOI. We heard that providers were demanding higher increases on average and that the cost of drugs continue to exert an upward pressure on premiums. Furthermore, if the pilot is not extended, the CSR loads would be projected to increase as there would be less members in a civil plan to spread the load. Any questions on this?
Edith, could you remind us, or at least me, what the effect on premium is of the last bullet? If
The CSR?
CSR's changed, what happened?
Yeah,
to the rate?
so carriers do include a CSR load in their rates, and it really varies a lot from one carrier to the other, depending on their population. Like, for example, if they have more lower cost or lower income people, like plan type 1 and plan type 2A, for example, they'll have a higher load than someone that has more higher income people in connector care.
I guess, and the other dynamic, Nancy, is as Edith had said, if folks are exiting the market or leaving the market, there's a smaller population to spread that load over. So then the load goes up.
And if people start leaving, do we have a sense of sort of what that does to the underlying pool overall?
It depends on who leaves.
Yeah,
But the populations who we think could be most affected by some of the proposed federal policy changes.
I mean, the pilot, we don't have their claims experience yet, so I cannot really say anything about that. I mean, if premiums are going up, often when premiums are going up, it's like people that really need health coverage, they'll stay, and others that are healthier will leave. So that implies a deterioration of the risk pool.
Okay, that's what I would have assumed, but you're the actuary, so. Okay.
But I mean, in connector care, people are kind of insulated from these higher increases. So because we have, some enrollee contribution for the lowest cost plan.
And Nancy, I would just, I'm sorry to cut you off, Edith.
No, go ahead.
I just wanted to briefly say, Nancy, to the extent you're asking about some of the things that we think may be in the pipeline or under discussion right now that are not captured here because they broke out of, Energy and Commerce and House Ways and Needs earlier this week. I would just note there's some pretty significant changes being proposed with respect to lawfully present immigrants and their eligibility for APTC.
Yeah, I saw that.
Big implications just in terms of enrollment numbers, but then your question, like the secondary piece of that is that's awful for those people who would lose coverage and access to APTC, but we know that lawfully present immigrants in our population tend to be younger, use less healthcare, so they're actually kind of downwardly subsidizing the risk pool in a lot of ways. So obviously there's a long way to go with some of these proposals, but just want to note that's a way that there could be actuarial downstream effects from some of these proposals about who gets what in the way of federal subsidy.
Yeah, thank you.
Just out of curiosity, do we collect any data that more or less identified immigration status to give us some sort of input on the potential impact on those regs?
Yes, we do have some of that information, and that is going into the estimates and analyses we're doing about what the impact of different proposals are. So that's certainly something we can loop back with you and certainly just keep the board generally posted on.
Thank you.
Sure.
Any other questions on this slide? And we can move to slide 11. Hearing none.
So maybe we can move to the next slide so we can see the numbers. So for FY26, the gross cost for the program is estimated at 433 million, which is 31 million lower than the estimate presented at the January A&F subcommittee meeting. The major drivers of the decrease are a reduction of 20 million in the CCTF draw for operating expenses, a reduction of 16 million for this 2024 CSR reconciliation caused by timing changes in the inclusion of CSR advanced payment, and higher membership is partially offsetting this favorable variance. On the next slide, we can see the net costs. So after accounting for federal financial participation, FY26 cost is estimated at 264 million. Which is 25 million lower than the estimate presented in January. Any question on this?
There are a lot of noise, shall we say, as it relates to CCTF, and we are not just hearing the noise, but even seeing things that are being floated out there to providers with regard to the Commonwealth situation as it relates to funding and being able to pay for certain services. What is our plan B around CCTF? Should CCTF not be available to us or be available to us at a lower increment than what we're anticipating that we will need in order to balance our budget out?
I'm happy to speak to that briefly, Dimitri. Yes, so you were referring to there was a House proposal or an amendment in the House budget on a pretty sizable transfer out of the CCTF into the Health Safety Net Trust Fund. So I think where we're at right now is just trying to provide education to folks about what the implications would be to the CCTF. As we're looking at our forecasted needs, the CCTF was obviously created to support affordable coverage options through the Health Connector back in 2006 as part of Chapter 58 of the Acts of 2006. So right now we're working to just make sure that, conversations with folks are resulting in everybody being aware of what those needs are, because this is the funding source for the Commonwealth as it relates to these programs. End of story, full stop. So we've got a ways to go with the budget process, but it's been helpful that folks have been really receptive to that information, and the Commonwealth is obviously has supported these programs and that funding arrangement for the duration of the Health Connector's existence. So we'll certainly keep this subcommittee and the rest of the board posted on conversations there.
I guess one of my concern, Audrey, is that there are sister agencies that are notifying providers that they would not be making payments to them in the short term as it relates to services that they're providing. So my concern around that is, as the state, from a big picture perspective, look to plug all these holes, what potential impact could that have on the connector, since there is a dire need for cash and a lot of stuff seems to be drying up?
Yeah, no, I think it's a great question, and I can't speak fully to that bigger picture. But what I can say is that we're doing everything we can to inform that bigger picture conversation that the legislature and others are having while they're talking to all these different programs and interests that are, we appreciate in these are challenging times for different programs in the healthcare system generally. So I'm seeing it as our responsibility to make sure we're putting the right information in front of the right people so they can make sure we continue to have what we need in our space.
Thank you.
Of course.
Any additional questions?
Member months for FY26 are projected to be 3.8% higher than what was presented in January. Most of the difference is due to stronger membership than expected in the first months of calendar year 2025. And this higher membership is rolling forward into FY26.
Can you, Edith, just walk through like December 25 and January 26? I just want to make sure I understand the different
Yeah,
pockets.
so there is a drop in membership, and it's because we're assuming that the pilot is gonna expire.
So that 66,239 is the pilot in December,
Yeah.
and we're expecting the drop to go to 41,615.
So some of the population, well, it depends what happens, but if the generous APTC are going away, then the 300 to 400% is going to go in the APTC only bucket, and the 400 to 500% will go in the unsub bucket.
Okay. Okay. And I guess the next question I have is, the member months for fiscal year 26 are higher than the member months for fiscal year 25, and that's because we have higher membership right now and it's going to ramp down.
I mean, we expect that it will continue to go up, but not at the same rate as what we've seen over the past few months, or the past many months, actually, because it's been going up. Even if it's still going up a lot, I mean, the rate is less than it was like months ago, because, the unwind is over, and basically all the changes relating to people moving to Medicare, all the changes are pretty much done. So now we're closer to, business as usual thing. There are still a few changes that they're doing, but the big part is done.
Okay, but we are going to see a drop, right, in the pilot program, and
Yeah.
the enhanced APTC is going to go away. So because of those two reasons, we're going to see a drop in membership in fiscal year 26.
Right, in total membership, but we expect that the connector care, the core connector care membership
Still
will
going to
continue
increase.
go up. Yeah.
Are there any additional questions for Edith before we pivot to the administrative budget? And hearing none, I will pass it to Rakita to review fiscal year 26.
Thank you, Carrie. Good afternoon, everyone. So this slide provides an updated high-level summary of our proposed 2026 budget compared to the projections we shared in January. The budget recommendation has been updated to reflect the current outcome of our enrollment and premium billing vendor procurement. The total revenue has reduced by 17 million compared to January, which is primarily driven by a reduction of 20 million in the CCTF request for administrative costs. Our other revenues constitutes of the investment income and miscellaneous sources. The total expenditure are expected to reduce by 14 million, resulting in a negative net gap position of 5.5 million. This is driven by the outcome of the EPB vendor procurement. Our reserves are projected to be at 59 million at the end of 2026, which are sufficient to cover 6 months of operating expenses. Any questions? So we can move on to the next slide. So this slide explores more in detail the expenditures. The primary contributor to the decrease in expenses is the contact center and enrollment premium processing line item. Having a successful bidder for the EPB procurement, the cost was adjusted to reflect the potential outcome. The HICS operations and maintenance costs are provided by our EHS colleagues, and they are the best estimates which are available at this time, but we will be closely monitoring them moving forward. There has been no change in the appeals program and the strategic plan investment budget since January. Our increase in outreach is mainly due to timing adjustments. The reduction in personnel and fringe cost is due to the removal of a placeholder for future hiring, terminations, and a delay in backfilling some open positions. The decrease in IT and administrative cost is attributed to the loss of disposable assets that existed in January. Our consulting and professional costs have increased due to the contractors we will be hiring for the implementation and enrollment premium billing vendor. And there has been no change to our gap adjustments except for gas P51. This is due to the capitalization of the contact center cost, etc., and AHS. Are there any questions?
Yeah, Rakita, are we, or for who's ever this for, is the connector subject to the hiring freeze that Governor Healy just announced? Or are we exempt?
It's not directive to the Health Connector as a quasi.
Yeah.
I would say we tend, when this has happened in the past, we tend to try to, I guess I would say, support the spirit of
Yeah.
the freeze, just appreciating the broader fiscal environment. So we'll certainly be conservative in our practices, even though the specific policy is not directive to us as an authority.
That seems politically wise.
Any other questions? Carrie, I'm going to pass it to you. Thank you.
Thank you, Rakita. That is the end of our formal slides, but as we mentioned at the top of the meeting, we have provided an appendix which depicts the scenarios that Edith had mentioned earlier. So I'll just share this and just to see if there's any questions. Obviously, the range is significant, 350 to over 550 million, depending on what could potentially happen here in the next 6 months to a year.
So I guess I have a question on the last scenario, which is that's the marketplace integrity and affordability rule is and also the pilot is in there.
Yes.
So I guess my question is, what is because we didn't include MIA in your estimates. How much is just that worth?
Edith, do you want to speak to that?
Approximately.
Yeah, I could tell you. Well, so there is like the the applicable percentage. They are higher than what we would see in the non-IRA. So that brings the cost up quite a bit. I mean, I could provide you with the exact number.
I was just because I mean that's like the one I feel like a likely scenario could be enhanced APTs and pilot expire and MIA moves forward as is, right?
Right. It's just MIA has some applicable percentage, so they would replace the non-IRA scenario.
Oh, okay.
Yeah. And then it has a lot of other effect, especially on membership. Like
Right.
for example, shorter enrollment period, and
Right.
then going back to the way RFIs were done in the past. So that brings down membership. So they are both, offsetting a little bit each other.
Okay. Okay.
Yeah.
Because that's a big unknown. Like, when do we, is there any speculation as to when there'll be some finality to that rule?
We're hearing, so actually it's interesting and very unusual. So CISIO is basically driving towards finalization of this rule. It's at OMB right now. We've heard that their goal is to get it out by early June. So pretty soon. They're on a pretty fast track. But unusually, the reconciliation bill that's in the House, the draft language actually takes most of this rule and codifies it, or is seeking to codify it in statute. So it's kind of strange. It's like you have the legislative branch and the executive branch trying to do the same thing, and it's unclear which place it will land, if either. But so I don't know. It could end up being that the rule is finalized in June, or they pause on the rule and let Congress move forward with those actually being statutory changes.
Okay.
But as you know, Bella, some of those have significant implications for rates and carrier decisions, and obviously, issuing policy changes like this in June or July after rates are submitted to DOI today, is not an ideal regulatory environment.
Yeah, it seems very, very disruptive.
Yeah, agreed.
Any other questions on this?
If I could just add, I just want to thank Carrie and the finance team for their always exemplary work. But in my 13 years at the Connector and longer in state health policy, I can't remember an environment that had this many different variables and different directions things could go in a relatively short period of time. So the fact that they're tracking all those different pieces and getting us on as strong a footing as possible is really appreciated. So I just wanted to thank the team.
Yes.
Thank you, Audrey.
Yep. Thank you. Yep. Yeah, I can imagine what the tons of spreadsheets and all the numbers. I'm sure it can be taxing to kind of keep track of all the different changes. So is there anything else? Any other questions or topics in regards to this, the finance presentation?
If there are any like huge major changes that will significantly affect these, or I should say when, but I'll be hopeful and say if, will those come back to this committee, or does it depend on timing, or?
I think we can really follow your and Bella's lead there in terms of when you think it makes sense for us to come back together. We'll keep you posted, obviously, if something passes through Congress and gets signed into law that has major implications for our enrollment or our budget, that may certainly be in order. I know we're bringing this budget before the board pretty shortly, but if something shakes loose after that and we need to come back together for a briefing or otherwise, or for planning purposes, I think we should certainly be prepared to do that. Again, whether it's something congressional or major regulatory action.
So will this budget not change before it's brought to the board, or will it change based on new information?
I would say I would not. So the budget that will come to the board is, excuse me, just the administrative budget. I don't suspect significant changes, but we will see over the next few weeks what happens, and if there are I mean, there will be some changes. We need to incorporate some of the financial statements that have just been produced. But I would, of course, I'm more than happy, and I think we should share the presentation with the subcommittee again, I think, Audrey, before we go to the June 12th board meeting. So we can talk about timing offline. I need to connect with others to see when we want the board decks done and all of that, but we're more than happy to share a draft if that's okay with you, Audrey, with this
Absolutely.
subcommittee.
That sounds right.
I do expect some changes, and quite honestly, it could be where we might be able to bring down the CCTF draw for admin a little bit more. I just want to make sure there's still, 6 weeks left in the fiscal year. I just want to make sure nothing out of the unexpected were to occur. But I think, we'll be able to make some adjustments. So we'll share that with this group prior to the board meeting.
I guess one last question, this hypothetical, if MIA goes through and we expect our program cost to actually be higher than what we think today, does that mean we need a bigger draw from the CCTF? Like how does that mechanism work?
Do you mean the process of letting folks?
Yeah.
Yeah, I mean, we are in communication with our colleagues at ANF and EHS. We do actually meet every couple of months on enrollment. In fact, I think we have a meeting next week. But if we were to see, any significant changes, we would obviously share those projections ASAP, particularly now that, the budget process is in full swing.
Yeah. Great. So I think this is the last thing on our agenda. So can I entertain a motion to adjourn?
So moved.
So that was Dimitri and Nancy?
So I think you have a primary and a second.
Yep. So Kathy, can you take a roll call?
I
vote?
sure can. Okay, Dimitri,
Yes.
Bella,
Yes.
Nancy.
Yes.
Thank
Great.
you.
Meeting's adjourned. Thank
Thank
you,
you.
everybody.
All right, thank
Thank
you.
you.
Thank you all. Thank you,
Everyone.
Bella.
Thank you.
Bye.